Hey, how's it going? So in this video, we're going to be talking about trading psychology. So this is a very big subject matter. And I would argue, or not even going to argue, it's a 100% fact that is the most important thing about trading, not your technical analysis, not your patterns, none of that stuff, okay? What's going on between your ears is the most important thing when it comes to trading. Okay, so that's what we're going to dig into in this video. I'm going to try to keep it fairly short, but it is a pretty big subject and it's got a lot of parts to it. So we might not be able to cover everything, but I'm going to give you some really good guidelines in this video. And also I'm going to give you a exercise. So this is an exercise that I don't believe, I would say 99.9% of you probably have not heard of before. And it's going to sound very foreign. It's going to sound pretty weird, but it's an exercise that's going to help you with it's going to help you get over fear of loss. Okay. So I'm going to give you that as well. So I challenge you. I know a lot of you are ADHD like myself, and it's hard to sit through long videos. So I'm going to try to keep it fairly short, like I said, but I challenge you, be patient, exercise that patience. That's important as well. Just like being a good trader, you need patience. I challenge you to exercise that patience throughout this video. And well, let's get into it. Let's get into all those good juicy details. So number one, when it comes to conquering your trading psychology, you need a long-term perspective. That is 100% key. You need a long-term perspective, okay? So what do I mean when I say you need a long-term perspective? What does that even mean? Well, a big problem with traders is they're too focused on the short term. So like the trade that is right there in front of them, that's staring them in the face, that they're trading at this very moment, they put too much pressure on it, too much weight on it, okay? And they should be thinking, or they shouldn't really have any weight on that trade. It should just be something that they're executing, and their focus should be more so on what is the result going to be for me if I was to take this setup right here, this setup that I'm trading right now, if I was to take this over the course of like, say, 50 trades, if I was to take this setup over the course of 50 trades, would I come out profitable? Would I be profitable if I took that trade over 50 trades? You need to stop caring so much about if this single trade right here is going to be right or wrong. It's random. Short term is random. Okay? We're focused on the long-term edge. We need that long-term perspective. And we're going to get into how do you achieve that long-term perspective. Okay? You achieve that long-term perspective by backtesting. So how do we backtest? Well, backtest is basically just studying old data. You need to go back, not just a couple weeks, not just a couple months. You need to go back years and study thousands. Yep, I said thousands, not hundreds, thousands of charts. You need to study charts. You need to study your strategy, your system. You need to look at so many charts to the point where it is burned into your memory. So when you actually go into the charts, you recognize it, okay? And how does this tie into like long-term perspective though, you might be thinking? Well, when you back test, you need to be tracking like your wins, your losses through a large data set, okay? So if you're going back like years and you're studying years worth of data and you're tracking everything. So you got your pattern, you got your system, you're going back and you're testing it years and you're keeping track of like how many winners you got, how many losers you got, and you're keeping track of, or like maybe you're not trading a strategy that's like a high win rate strategy. Maybe you're trading a strategy that's more tailored to bigger wins and losses. So like a lower win rate strategy, but your wins are bigger than your losses. You track that as well if that's your thing, and you get a large data set over a large period of time. And there's something about having hard data in front of you that really clicks in your brain. Okay, having that hard data and not just up in your head. There's a big difference. Okay, and when you have that hard data looking you in the face and it's telling you, if I was to take this setup, this strategy with clear defined rules, if I was to take that setup over the course of a long period, I'd come out profitable. All that's left for me to do is to stay disciplined, to trade that strategy. And so by having those results, it does make it a lot easier to have that long-term perspective to remain disciplined. Because when you look at something so much, as I said, you need to be studying a lot of charts, okay? And most people who say they're backtesting, they're not backtesting enough. I mean, you need to look at charts to the point where you almost become sick of it. Like you're just sick of looking at them. It's gotten that ridiculous. You need to look at a lot of charts, guys. I mean, thousands of screenshots, okay? That's how obsessed you got to be. Some of you might be thinking, well, I don't think all that's necessary. I think you could get by without doing that. You won't make it. Promise you won't make it if that's your attitude. Because you got to be willing to do whatever it takes in this business. You got to do whatever it's take, and you got to have an insane work ethic when you're starting off, okay? A little bit later, once you kind of got your strategy established, you've done the back testing, you got your things in place, you could chill a little bit more, and you still got to keep that discipline, trade your system, review your trades, all that good stuff. But the hardest part, this is where most of the work comes in trading. This is where the vast majority of the heavy lifting comes in trading, is with back testing. Okay, I'll tell you right now, I fucking hate back testing. Okay, I don't even got to back test anymore, and I still do it. Every single day I still do it because I'm always trying to improve myself. Okay, I'm trying not to get complacent. I'm always trying to find better ways to do things. Now, like I said before, I could make money with just basic support and assistance, sure, but I'm always trying to improve. I'm always trying to become a better trader. So even myself, being a millionaire trader, I still backtest every single day. Every single day. And a lot of you that are watching this haven't made a dime from the market, and you're unwilling to backtest because you think it isn't necessary. Think about that. Really think about that long and hard. That's what she said. All right, so that's very key, is to developing that long-term perspective. Backtesting is a must, okay? Because again, you have that data in front of you, okay? That hard data staring you in the face. It's right there in front of you. And that is one of the best things you can do for developing that, for having that long-term perspective, is by backtesting and having a sample size. So this kind of ties into that. So clear defined rules. You got to have clear defined rules, because it removes the thinking and it allows you to just execute what's on your plan, whatever your strategy is. So I don't really agree with just, because there's traders, they'll go into the market every day and they'll just trade something that they think looks good. I don't think that is an effective style of trading. Now, I'm sure there's people that do it successfully, but I'm telling you, there ain't many. Okay, so why do I recommend this? So what goes wrong when we just trade what we think looks good and we don't have a clear defined rules that is backed up with backtesting? Well, the thing is, the market will play tricks on you. The market will lie to you, or not the market. The market won't lie to you, but your thoughts will lie to you to get that dopamine hit. Okay, because when you're in the game for real, and you have those emotions pulling at your strings like greed, fear, you'll start to see things that aren't there. Okay, not literally, but you'll make the chart to be out something that it's not, to fit what you want to see when you don't have clear defined rules. Then you'll take trades you shouldn't take because you're trying to force it. You're trying to force something that literally is not there. And I'm telling you, you will get smashed in doing that. You will get run out of this market doing that. So that's very important, to have very clear defined rules, and you need to have them written down and have that shit in front of you in front of the trading day. And if whatever you're trading does not match what's on that list of rules that you established beforehand, when you were in a rational mind space, when those emotions weren't tugging at you, those clear defined rules that you have there in front of you, that's the truth. That is the correct plan of attack. Okay? Anything outside of your clear defined rules, absolutely anything outside of your clear defined rules, is BS. Okay? Think of it like it's basically just your emotions trying to trick you to get a dopamine hit. That is literally all it is. Your emotions are your mind's trying to get that dopamine hit. Okay? And as I've said before, successful trading is boring trading. Following clear defined rules day in day out, it's not an exciting process. But you got to ask yourself, are you here to make money, or are you here for excitement? Professionals are here to make money. I'm here to make money. Are you here to make money? That's a question you got to ask yourself. So have clear, defined rules. Removes the thinking. It's just pure execution, day in, day out, day in, day out. Okay? Trade small. So if your palms are sweating when you're in a trade, you're probably trading too big. All right. So a number that's thrown around quite a bit is 2%. So you'll see it thrown around quite a bit on social media. Don't lose more than 2% of your total overall capital on any single trade. But in my opinion, 2% is more of a number for like experienced traders. If you're a novice, 2% is way too aggressive in my opinion. And I believe that is a recipe for disaster. Okay. You're just asking to blow up, risking 2% as a novice. I recommend max 0.5%. Okay. And here's the thing, even when I just said 0.5%, some of you, that's going to be too much. Some of you, 0.5% is going to make you sweat. So guess what you do? You lower it even more. Still sweating? Lower it even more. Lower it as much as you got to the point where you can execute without that fear weighing over your head. Okay? Because a lot of the times that's the problem. You're just trading too big. Cut down the size. Okay? And for a lot of you, that would solve the issue. So you need to trade small. Okay? And fuck anybody that's shaming you for trading small. Okay? You need to focus on your journey. Focus on your process. Okay? There's nothing wrong with trading small. We all started somewhere. Trade small. Build a cushion trading small, build a little cushion, and then slowly scale up. Once you're comfortable with that amount, you bump it up a little. And then you do the same thing. You trade a little bit longer, you build an even bigger cushion. You trade. Guess what? Once you're comfortable with that amount, you bump it up a little bit more. And then you trade, build that cushion, bump it up a little bit more. And you keep repeating that process consistently. It's going to take patience. It's not going to happen overnight. But you do it consistently, and that's how. And before you know it, you're trading size that would previously stress you out, make you sweat. Now you're doing it no problem because you built your way up to that. You can't just jump in as a novice risking 2%. Okay, because a couple losses was 2%. You take 2, 4, 6, 8. I mean, you're sweating. You're sweating now as a novice. Okay. So that's what I'm saying. Like, eventually you could work your way up to that level where you could do that, where you could risk 2%, but it's not going to happen like right off the jump. You're probably not going to be able to handle it. So work your way up very slowly. Okay. Slow and steady wins the race every single time. I promise you. All right, I'm going to give you a useful exercise. So say you did everything I just mentioned a second ago, and you're still struggling. Nothing seems to work, which probably isn't likely. You're probably bullshitting. But let's just say it still isn't working for you. You're still struggling. And so like you've done the back testing and you're trading extremely small, but you're still struggling. It's like, I can't get over it. I take an L, I go crazy. I don't know what's happening. It gets in my head. What's wrong? Well, if you keep lowering size and it's still messing with your head and you don't have that money, or you're just trading such minute size that it's just, and it's just still messing with your head, then it's not an issue with money, most likely. It's an issue with your ego. It's an issue with you taking a hit to your ego. You hate being wrong, and that's a lot of traders. They hate being wrong. So I'm going to give you an exercise here, and it's probably going to scare some people off this video. But I'm telling you, hear me through. This is an exercise that I've recommended in the past before to traders, and I've gotten amazing feedback for the ones that were actually dedicated enough to give it a try. I think it'll help you immensely, okay? So whenever you're trading, when you have this issue, people that have this issue, what are they trying to do essentially? People are trying to avoid losses. They hate being wrong. Okay, you got the competitive spirit in you, like myself, and you hate being wrong, so you try to avoid it. Trading, to be a long-term winner in trading, to be a long-term winner, you need to learn how to be a good loser. It's very difficult, I know, but it's very important. So in this exercise, we do just that. It teaches you how to be a good loser. And the only way to be a good loser is to embrace losing. Okay? So what you're going to do is you're going to take a small amount of money that you can afford to lose. Okay? It's going to be different for everybody. If it's $100, do $100, $50, do $50, whatever. Take a small amount of money that you can afford to lose, and I want you to go into the market and lose it. I want you to go in every day saying, hey, today I'm going to lose some money. That is my goal. I'm going to go into this market. I'm looking to lose. You're going to do that for bare minimum a month, for an entire month, okay? And you're going to go in and try to lose. At the end of the month, I want you to have all that money lost. I want you to go in and try to lose all that money. Do it for, again, do it for a bare minimum a month. What you're doing with this exercise is you're training yourself. You're training yourself to embrace losing. Most traders, they ain't going to get themselves to do this exercise, okay? It's too out in left field. It's too strange. But if you want, let this stick with you. Let this really, what I'm about to say, stick with you. If you want what others do not have, you got to be willing to do what others will not do. Think about that. So you need to, because most people, 99.9% of the people listening to this right now, they're not going to do it. And a lot of people, they already clicked off after I recommended this exercise but I'm telling you, it is so effective. And it is an exercise that I personally did when I was struggling, and it helped me too. Okay. You're embracing losing. Every day you come to the market, you're coming into the market with the sole intention, I'm going to lose money. On the other end of the spectrum, whenever most novices come into the market trying to avoid losing money, you're doing the opposite. You're coming in trying to lose it. You're going to do that for a month. And basically the goal of this, because you got to rewire yourself as a trader. And that's the goal of this exercise. You basically got to rewire yourself. Okay. And let's say you've done that as well. So say you've done the back testing. You have clear defined rules and you're trading small. You did that exercise I just gave you above or a second ago, and nothing is working for you. Still nothing is working. Well, the next issue is maybe you are forcing a particular trading style that does not fit your personality. So say, for example, you're a swing trader that's trying to be a day trader. So maybe like day trading is too fast paced for you. Maybe if you're like, say you're like the type of person that it takes longer for you to make decisions. If you're that type of person, then you're probably not a day trader. If you're the type of person that takes a while to make decisions, okay? You may be a swing trader or a position trader. You got to think about that, okay? Because I know a lot of people, they'll get into day trading and then, they'll maybe lose some money. They'll get discouraged and then they'll just throw in the towel altogether. And I've said it before, I think there's a trader in all of us, but I don't think all of us are really day traders. You gotta tinker around with it. Now, there's some people, they can day trade, they can swing trade, like myself. But some people, I'm sure no matter how hard they try, it's just day trading, for example, it may be too fast paced, it's too quick. They need time to just like sit still, okay? And it's just too quick for them, and maybe it's problems with getting filled, whatever. Or experiment around. Try swing trading. If swing trading still doesn't fit you, try position trading. You need to tinker around and try different things. And I think if you do so, I think eventually, and you still do everything that I mentioned beforehand, I firmly believe that you will eventually find something that works for you. I believe that wholeheartedly. Okay. And lastly, I absolutely recommend you read Trading in the Zone. I'm going to leave a link to that in the video description. Now, I've read several trading books, and I'm not a fan of a lot of them. This is a book that, it was like one of those, you don't have very many of these moments in trading where something just like clicks for you, where something just, aha moment. Reading this book was one of those moments for me. You don't have very many of them in your trading career. This was one of them for me when it came to trading psychology. Now, you're not just going to read this book and you're not just going to be like cured and you're not just going to be like some robot. No, but it gives you the framework. Okay? This is literally, this is the only book you will ever need on trading psychology. You don't need to buy anything else. This is the only book you need on trading psychology. Everything you need in regards to trading psychology is in that book. Okay. And yeah, so I mean, it's just a really amazing read. You know, I recommend it every chance that I get. You've probably seen me recommend it so many times on social media. And again, it's just like, it made a huge impact, and it's just made a huge impact on me and helping me get my trading psychology to a point where I needed it to be. So I recommend you read that. Again, link in the video description. And I think that about covers it. So if you enjoyed this video, leave a like, you subscribe to the channel, and I will keep that content coming.